I'd like to call this April 11th, 2023 meeting of the Financial Audit Advisory Committee to order. And our first item of business is the approval of the minutes from August 16th, 2022.
Matt, should we do a roll call?
Oh, yes, sorry, says the virtual meeting. So who will act as clerk? Anybody acting as clerk this morning? I could just go ahead and take a roll call. Well, actually, why don't people introduce themselves? Because I'm trying to recall who is actually on the committee versus who is here serving at a municipal capacity or otherwise.
I think we have Matt, Arthur, Wendy, Carol, and Court. 5 total, if I'm correct, with 1 vacancy.
Right.
I think that's correct.
Yes.
Okay,
Looks like
so
Wednesday.
Mr. Fullman.
Hello, I'm here.
Okay, Ms. Wilson,
Here,
Mr. Booth.
Present. Good morning.
And myself, and then who else?
And we're missing, Wendy's not here
Wendy.
today.
Wendy's not here. Yeah,
her
so
term
we have
has-
4, and that's a quorum.
Yeah.
Okay. All right, because I do know we have another agenda item about the
Yeah.
charge
Yeah.
coming up, and it just illustrates maybe why.
Yeah.
Okay. Now our first item of business, which is the approval of the minutes from August 16th, 2022.
I'll move approval of those minutes.
I'll
Okay.
second that.
All right. I just wanted to make a comment. First of all, I thought the minutes were highly accurate and extremely thorough. If anything, maybe too thorough. I felt that I was reliving the meeting. by minute.
I agree.
Particularly
Well done.
the light board section was
Yeah, my assistant.
Although, given the fact it's been several months, it was good to have the.
it was
I
helpful.
agree. I appreciated the
Revisit.
detail because it has been so long.
Yeah, but it took me almost as long to read the minutes as to have gone through the first meeting. Anyway, let me go ahead and take a roll call vote. Mr. Fullman,
Aye.
Ms. Wilson,
Approve. Aye.
Mr. Booth,
Aye.
and myself, Mr. Johnson, aye. All right, we're moving right along to the second agenda item, which is the financial statements and review and approve the letter to the light board, much shorter than the minutes. Right?
Yeah, it's the letter that the FAC would submit to the light board, similar to what we would do for the select board and to the regional school district. So this one was a follow-up from last meeting.
That's right. I didn't have any comments. That was about as simple a letter as you could possibly get on one of these. And it's for a period a while ago at this point too.
Yeah.
Matt, would we want to put a new date on the heading lest people get confused?
Okay.
What do people think?
Yeah, that's a good idea.
I agree.
So it could read April 2020, April 2023, and then reference the fiscal year in question.
Okay, that sounds good. Could I get a motion on that?
Motion to approve with the amended for Mr. Booth.
Okay,
Second.
all right. Any discussion? All right, hearing none. Mr. Fullman,
Aye.
Ms. Wilson,
Aye.
Mr. Booth,
Aye.
and myself, Mr. Johnson, aye. Okay, I don't think that the next item is going to go as quickly. So let's look at the town audit there and review the draft audited financial statements for the town for FY22. And who will be leading that discussion?
That would be me. My name is Scott McIntyre. I think I know most of the committee members. I'm a partner here at Markham, and I'll talk about that in a minute. With me today is Sarah Cordart, who oversaw our field work and helping the town pull together this ACFR, or the Annual Comprehensive Financial Report. And grateful to be here this morning to walk you through the highlights of both our audit and the financial statements that you have in front of you. And I will be sharing my screen to go through some of the highlights. And as the chair said, this probably won't be as short as the other two agenda items ahead of me. With that said, what I have found to be beneficial at some of these remote meetings is I'm going to spend some time going through this. It's a overwhelming document in some respects. It's well in excess of 100 pages. I'm going to hit the high points, but Sarah and I are prepared to go into more detail should the committee members want. And certainly we'll make ourselves available to try to answer any questions. So before I begin, Ian talked about it. I'm not sure if everyone on the call right now was on here when Ian asked me about it, but in January of this year, Melanson, the company I'd been with for 34 years, and Sarah close to 20, I think, we became part of a larger organization, a larger CPA firm, Markham LLP, a national CPA firm. I can speak again. I'm going to say a couple more words about it, and then certainly if you have any questions about this and what it means for our services going forward, I can easily address them, or I think I can easily address them. The genesis of it, and I think most people were on the call, is there's just not that many students going into accounting anymore. And we were finding ourselves as a large regional CPA firm kind of stuck in no man's land, where the larger firms were, honestly, they were poaching some of our people. And so we were having some retention problems, and we needed to make a move to shore up our bench, which we have done. As I told Carrie, the town manager, when I called her and let her know this, Markham's governmental practice, which is what Sarah and I are involved in, nationally, it was about the same size as Melanson's governmental practice. So combined, we've just sort of doubled the size of the governmental practice. But because of our industry expertise, when I say ours, I mean Legacy Melanson, because of our industry expertise in the Commonwealth of Massachusetts, our group is really leading the combined governmental practice of Markham right now. So it really is going to shore up our ability to continue to provide services to local governments in the Commonwealth, and we're very excited. Certainly, the first month was very interesting. But since then, it has been great. We've been able to double the size of our resources and continue to service the clients the way we have been doing so for many, many years. With that said, I'm going to hop right into sharing my screen, and I just need to put these on for a moment. And 3 years later, you'd think I know right where it is. Okay, you just should see the cover page of your annual comprehensive financial report, and I'm going to hop over to the independent auditor's report in a minute. But before I do, as I often do at these meetings, I talk a little bit about how the audit went, because that really is probably the most important communication we can make. And some of the things that I'm going to talk about right now are required communications. Really to let you know how the audit went. Our audit of your financial statements went well, meaning we found the books and records to be in good working order. And as a result of that, we did not need to propose any significant audit entries as a result of our work. That's a key communication that needs to be made, is required to be made by our auditing standards. Also, there were no disagreements between management and our firm and how to apply generally accepted accounting principles. And the last of really three big required communications deals with accounting estimates. And there are several estimates in your annual comprehensive financial report, the largest of which are your net pension asset liability and the related deferrals. And of course, pension expense becomes an estimated amount in there. And the same about your net OPEB liability and the related deferral accounts and OPEB expense are based on estimates. The useful lives of your capital assets are generally estimated. And something new to the financial statements this year is there was a new Governmental Accounting Standards Board statement on leases. You now have a lease receivable in your general fund and in your governmental activities. And some of that number is based on some estimates, including an incremental borrowing rate and some other assumption estimates. By speaking about assumptions, getting back to the two largest estimates in your financial statements, the pension and OPEB asset and liability, keep in mind that those are based on the assumptions there are reviewed obviously by the town. They are your assumptions. They are reviewed by us as part of our auditing procedures. And of course, they're reviewed by your actuary. And the actuary's work is based on their own set of standards. We have generally accepted auditing standards. They have their own set of standards that they apply in coming up with those estimates. So with that quick overview, I am now going to turn to our opinion. I'm going to, throughout the course of this conversation, I'll probably reference a couple of page numbers. For example, I'm going to turn to print page 11. And if you're following on in the PDF, it's 21. So it kind of makes it easy here. It's just, if I reference a print page, the PDF page is 10 more than the print page. So print page 11, we'll go to PDF page 21, and you see our independent auditors report here. Going to spend an extra minute on this. Usually we just say it's a clean opinion or unmodified, and that your financial statements are, as a result of a clean opinion, we're saying your financial statements are materially fairly presented in accordance with generally accepted accounting principles. You may notice that this report looks a little bit different than prior reports, because it is. It says the same thing. Our standards, meaning generally accepted auditing standards, changed for your fiscal year 22 audit. And so as a result, the order of things, in our opinion, it really is an order. You see at the top here, we start this report with our opinions. And then we go into the basis of the auditing standards that we followed and get to the basis for our conclusions. A year ago, this report was flipped around, where we started with what we did and the standards that we followed, and we've ended up at the bottom of the independent auditors report giving you our opinion. Right now, essentially, everything is just flipped upside down. We start with our opinions, give you the basis for our opinions based on the standards that we follow, and then we we talk about management's responsibility and auditor's responsibility. So nonetheless, while it looks different, it says the same thing that you've been receiving, that there's a clean or an unmodified opinion for many years. And that is that, in our opinion, your financial statements are materially fairly presented in accordance with generally accepted accounting principles here in the United States. Following the opinion is your management's discussion and analysis. And that's print pages 15 through 24. I want to quickly look at one page in management's discussion and analysis. It's print page 20 or PDF page 30. And all I really wanted to show you is this part right in here. It deals with your general fund balance and the different components, the restricted, committed, assigned, and unassigned. I'm actually going to come back to this page at the very end, because we're going to speak a little bit about each one of these fund balance components. And as you can see, there's some significant changes to the related accounts from prior years. And we're going to walk through why each of these components of general fund balance changed. I think it's probably a nice way to wrap it up, focusing on general fund balance, which, despite the fact that we have 100 and something page financial statement, most readers are still going to focus on the general fund balance section, which we'll turn to that page on your balance sheet in a moment. But this part of MD&A is where we'll conclude, and we'll talk about what the changes represent in each of these components of fund balance. So with that, I'm going to turn all the way over to print page 25 or PDF page 35. If you recall from prior conversations about your financial statements, your annual comprehensive financial report has dual perspective financial statements, both a long-term perspective and a short-term perspective. Your statement of net position is the long-term perspective. So this governmental activities is your general fund and all of your governmental funds, your special revenue funds, your capital project funds, your permanent funds, things like that. Business type activities are your enterprise funds. Now, what I want to point out here on this particular page comes right down here to your net pension asset. You flipped from last year, 6/30/21, you had a net pension liability. essentially because of market returns, and I'm going to speak a little bit more on that in a minute, because of favorable market returns, the liability turned over to an asset, which means as of the measurement date, the assets that you had in the contributory retirement system exceeded the what was previously considered the unfunded liability. So in your governmental activities, and that's really what I'm going to focus on, that switched from about an $8 million liability to almost a $4 million asset. Now, a couple of things to point out there. We're looking at your governmental activities as of June 30th of 2022. In addition, the pension asset is measured as of the year end of your contributory retirement system as of 12/31/21. So that's an important thing to point out because it was really
The stock market was rocking at about that time.
You got it. You got it. So I make no predictions. Auditors don't like to make predictions.
We shouldn't pull out the champagne yet.
Yes. Thank you very much. I appreciate the addition to the point here. It was you knew exactly where I was going. Make no prediction of what that liability, what that asset might turn into when the next measurement period is measured, when that liability or asset is measured as of 12/31/22. So with that said, I'm going to just go over to the next page in the liabilities and net position side of the equation. And I wanted to focus down here in the net OPEB liability. I should speak very quickly about this net pension liability right here. We were just talking about how it had turned to be an asset. Your CMLP, Concord Municipal Light Plant, is included as part of your business type activities, and that is also measured as of the year end of the light plant, which is 12/31/21. So at that point in time, that's why you have both a net pension liability here, and on the prior page you have an asset, because there are different year ends of some of the funds in Concord that come together. So I just wanted to quickly take a moment and point that out. Now onto the OPEB liability, and again, focusing primarily on the governmental funds, the governmental activities, the first column of numbers, you see a net OPEB liability estimated at $20.5 million. That is measured as of June 30, 2022. So the measurement date of that liability, unlike the pension liability, is measured as of the same date of this balance sheet. As a point of reference, that $20 million liability was about $16 million last year. And so what do we think probably was the driving factor behind the increase in the liability, given that it's measured as of June 30, 22? That liability is increased by about $4 million, predominantly because of the change in the fair value of the investments in your OPEB trust fund that went down. You'll see it later on, but I think over $3 million as of June 30th of 2022, as measured compared to the prior measurement period of 21. So one thing to point out,
covered by now, at least part of the value.
In all likelihood, that is the case. The other thing that I think is always important to point out when we speak about pension asset liability and OPEB liability is just a reminder of what the discount rate that is part of one of the actuarial assumptions. And when you measured your net OPEB liability, you applied a discount rate, essentially an estimate of what the future earnings of the plan will be at about 6.75%. That remained unchanged over the prior year. A couple of years ago, it was down to 6.5. You increased it to 6.75. And in our opinion, that's a reasonable estimated discount rate. So last thing I want to point out is it's not the most meaningful number, but it sometimes catches people's attention, is the unrestricted net position in parentheses, indicating that the liabilities outweigh the assets by about $16.6 million. A year ago, that was at about a negative $22 million. So you see some improvement in that. And I think really if you blend the improvement to the and switching from a pension liability to an asset, and the approximate $4 million increase in the OPEB liability, you come pretty close to the $6 million change, improvement, if you will, in the unrestricted net position of the governmental activities. That's just a quick walkthrough of the statement of net position. Again, that's the long-term perspective. One more thing on the long-term perspective, it's over here on page 38, which would be page 28 if you happen to have a hard copy. It's important, I think, to look at the third number up from the bottom, the change in net position, and you see a positive $7 million. So overall, the net position of the town on the accrual basis of accounting improved by about $7 million. And again, if you look at strictly at what happened with pension and OPEB, the changes to pension expense and OPEB expense are really what's driving this improvement in overall net position for the governmental activities. That was really the last thing I wanted to talk about on the government-wide financial statements. That takes us over to print page 29 and PDF page 39. This is the governmental funds balance sheet, and we're going to focus on mostly the general fund. I did want to point out that you have a capital project fund that has for fiscal year 22 is defined as a major fund. The accounting standards determine set the parameters for determining what is a major fund, and that would have its own balance sheet and own statement of revenues and expenditures on the next page. I wanted to point out that because of the significant assets that are in your capital project fund, that triggered it being considered a major fund this year. A year ago, you had a major fund other than the general fund. That was your federal grant fund, and that was driven by the fact that you had received some ARPA money. That cash that you received is essentially a liability until you spend it and then can recognize the revenue. You still see it here in your non-major governmental funds column. It's just not quite as large as it was in the prior year. And so that $2.1 million essentially represents unspent ARPA funds as of 6/30/22. Again, that's cash that you have, and you will be able to, under the accounting standards, recognize that cash as revenue when you do something with it. And that's something that you need to do, is once you spend it, it'll recognize the revenue. So the revenues and expenditures essentially match at that point in time. With that quick overview of some of the new major fund and why the major fund from the prior year is now blended in with non-major, let's focus on the general fund. And as we talked about in the MD&A, the focus really is on fund balance. You have your total fund balance of almost $35 million. That's come down about $3 million from the prior year. And when we go back to the MD&A, we'll look at some of the reasons why. As a quick preview, one of the things the town did and continued to do in fiscal year 22 was you continued to spend down some prior year encumbrances. That was money that was budgeted for in prior years that was spent in the current year. That's going to bring down your overall fund balance. And quite honestly, that's why there's again, we'll see it again in the MD&A, why your assigned fund balance has come down over the prior year. The other reason why total fund balance has gone down really deals with this restricted fund balance. This restricted fund balance is really your pension fund. And like we talked about before, the fair value of some of those investments as of June 30, 22 had declined over that same period from a year ago. So those are two of the reasons why total fund balance have gone down about about $3.3 million. So let's look at the individual components for a minute. The unassigned fund balance probably gets the most attention, with a June 30, 22 balance of $10.5 million. A year ago, that was about 10.8. So it's come down about 300,000. We'll focus in on why that came down. It's pretty straightforward. Above that is your assigned fund balance. There are really two components to that. One is encumbrances, money that are appropriated in either the current year or prior years that are carried forward to be spent in future years, are a component of that $3.9 million, as well as some of the fund balance or free cash that you have appropriated towards the fiscal year 23 period is also set aside in that assigned fund balance. The category above that, or your committed fund balance of $9.4 million, those essentially represent your stabilization funds. And you see almost a $1.2 million increase in there. And above that is the restricted, which I mentioned a moment ago, really is the pension fund of the town, and that's come down about $2 million, driven by the fair value of those investments in your pension fund.
Now, you keep mentioning things like, well, you see a $1.2 million increase, but I don't think we see it, right? There's no comparative view of year over year here. I think from a management perspective, it would be great, and I realize the formatting of the report makes it difficult, but to understand the net changes year over year, I think would be very helpful. Again, I don't know how to achieve that, but it almost seems like you have a secret cheat sheet that we don't have.
I could scan you my notes.
No, it's okay. It's okay.
Well,
but
why don't we take a minute? I was going to end with this, but I think your question or your point, your comment
now there we do get it on the top
is a valid one. Again, I was going to come back to this at the end, but it probably makes sense to switch over to this right now. I was talking about total fund balance of almost $35 million and indicated that it came down by about $3.2 million.
Yeah.
And that's what I was saying. The origin of that really is there's two components. One is the town has continued to do a nice job in spending down prior year encumbrances. You recall when we've talked about some management letters in the past that your practice and your policy really dealing with encumbrances were not well aligned. And as a result, the year-end encumbrance balance grew to be several millions of dollars. And the town has made a concerted effort to clean that up a little bit, if you will. And as a result, you're spending money in fiscal 22 that was really, the revenue was raised in prior periods. That's why total fund balance has come down a little bit. That's one of the driving factors behind the $3.2 million decrease. The other that I've been talking about comes back to this restricted fund balance of $10.9 million. That really is your pension reserve fund. And you can see that the value in those assets has essentially dropped by almost $1.4 million over 6/30/21. So those two factors, the reduction in the fair value of the pension reserve fund and the town's reducing or expenditures of prior year encumbrances, are really the driving factors of why your total fund balance in your general fund has dropped by about $3.2 million.
Well, the next question I'd have is those key ratios at the bottom, were 9% of unassigned fund balance as a percentage of total general fund expenditures, and the other one, the fund balance as a percentage of general fund expenditures. What are benchmarks for those ratios?
The 9% is right where, communities like Concord, you and your peer communities, by that I really mean the AAA rated communities, 8, 9, 10%. Sometimes they go above that. But 8, 9, 10% is really would be consistent with your peer communities they're rated the same way Concord is. The 29%, the total fund balance, is probably a little bit higher than your peer communities, because what distinguishes Concord a little bit in that percentage, it comes back to this almost $11 million in the pension reserve fund.
That we've paid down our pension better than many.
Yes, you have, but also that paying down your pension liability dealt with the long-term perspective of reporting. This is dealing with the short-term perspective of reporting. But what distinguishes you is that most other governments in the Commonwealth do not have a pension reserve fund of almost $11 million. Now that sits in your general fund. It actually, within the accounting system in town, it's its own fund or own entity. But because the origin of that money, it goes back to being coming from the general fund. The accounting standards have it presented within your general fund. And
So
most
most
of,
of the peer communities would have that total fund balance as a percentage of more closer to 20%, not 30.
yes, that's right.
Okay.
That's right. So. Real quickly on some of the other types of fund balances. We talked about the unassigned fund balance, you know, well, actually on this particular page of the financial statements, we really didn't talk about it yet. I did say, I think when we were looking at the actual balance sheet, that it went down about $240,000. If I'm going to just scroll down for a minute, and I want to point out this statement right here. And that is the unassigned fund balance of the general fund changed and went down by about $240,000. Now, the primary driving factors of this is the positive budgetary results of just over $1 million, less the fact that you used about $1.6 million in free cash for fiscal year 23. I recognize that the positive results of $1 million, and then you used about 1.6. So everything else being, you know, if nothing else changed is what I meant to say there. If nothing else changed, your unassigned fund balance would have gone down by 600,000. We're seeing it go down by about $250,000. I recognize those numbers aren't the same, and they're off by a few $100,000, but really the driving factors behind the reduction in your unassigned fund balance is the positive budgetary result. And we will look at that $1,005,894 in a few minutes. And then you subtract from that about $1.6 million that is used or was used for fiscal year 23. This $1.6 million in certified free cash that was used for fiscal year 23 is a component of this $1.9 million. When the town voted to use that free cash, you assign those dollars for a particular purpose. So they move up from unassigned fund balance to assigned fund balance. So.
Yep. And that's in our control, and we won't be doing as much this year.
So, great. The other thing I would want to point out in this assigned fund balance, we just talked about how the fact that about that $1.6 million of it is as a result of the certified free cash that the town planned to use in here, which leaves about $2.3 million. So 2.3 and the 1.6 is the 3.9 that we see here. That $2.3 million is your reserve for encumbrances. Money that's been appropriated in 22 or prior that will be honored going forward. As a point of reference, that's down substantially over the prior year. If you recall, we talked about that the overall fund balance went down because of the commitment that the town has made to spending down some of these prior year encumbrances. That is why your total assigned fund balance is down almost $3 million, because you spent down prior year encumbrances, the issue we've been talking about in the management letter for a couple of years. Above that is your committed fund balance, about $9.5 million. When we were looking at the general fund balance sheet itself, not the comparative page here in the MD&A, if you recall, we mentioned that these are generally your stabilization accounts. You see collectively the stabilization accounts are up almost $1.3 million in that last column of numbers, driven by the increase of over $1 million in the middle school stabilization.
And we will increase it further. Go ahead.
I'm sure that you will. I'm sure that you will. Well, I'm glad I took I'm glad Mr. Johnson, kind of pointed out that I have some notes that maybe you don't have, and I'm glad we took the opportunity to go to this page of the MD&A when we were specifically speaking about general fund balance. I'm going to go out of order a little bit further, and since we were just talking about the increase in your $240,000 decrease in unassigned fund balance, it starts with the positive budgetary results. I'm going to actually flip over to that page, which begins on print page 95, which makes it PDF page 105. The positive budgetary results stem from about $1.6 million in favorable revenues. See, the property tax collections were better than anticipated. Excise tax collections were better than anticipated, as well as licenses and permits. Those are the three major revenue sources that drove almost $1.6 million in favorable revenue collections compared to budget. Jumping down, and there's several pages we're going to go down to. I went one too far. On the expenditure side of the equation, you have unspent and unencumbered appropriations from fiscal year 22 of also almost $1.5 million. I'm rounding up there. The revenues were 1.5, almost 1/6. I'm going to just round and say that the total expenditures, unspent appropriations, were about $1.5 million. And you could go up and you can see the various functional expenditures that lead to a total unspent appropriations of almost $1.5 million. So collectively, the $1.5 million on the revenue side and the $1.5 million on the expenditure side is this favorable $3 million. Now, I look at that as the current year operating results, the favorable operating results of $3 million. But then you also, we talked about the fact that free cash is used. The town has a practice of doing that. Most do, almost all do. For fiscal year 22, we've previously been talking about the use of free cash for fiscal year 22, pardon me, for 23. But for 22, you can see that you used about $2.3 million. 1.3, almost 1.4 for capital purposes, and $1 million towards the operating budget. And of course, when you use free cash, you are planning on the inflow of resources to be less than the outflow of resources, because you're essentially drawing on that free cash or drawing on your fund balance. And so once again, just a quick recap, the $3 million in the favorable budgetary results, approximately $1.5 million on the revenue side and approximately $1.5 million on the expenditure sides. If you soften those results with the use of free cash by about $2 million, you're left with a favorable results for fiscal year 2022 of that $1 million. And again, that would help drive an increase in your unassigned fund balance. But as we talked about it on a couple of occasions, just want to remind the committee that for fiscal year 23, you appropriated $1.6 million of free cash. So you essentially have to take this number here, which is what was done in your MD&A, in that key sentence in your MD&A. And I'm going to go back to it, just take a second here. Here's the budgetary results that we just saw broken down between revenues, expenditures, and then we subtracted about $2 million of free cash used for 22. If we subtract the free cash used for 2023, we come pretty close to the $250,000 reduction in your unassigned fund balance. It's not exact. It never works out to be exact, but it's a good measurement tool, a good rule of thumb to look at the favorable budgetary results and then how much free cash or budgetary fund balance was used for the subsequent year. And that is very much going to be a good indicator of what will change, how your unassigned fund balance will change from one period to the next. Now, I've gone a little bit out of order here. I was also wanted to point out, well, I talked about that. I want to give the enterprise funds a quick moment, and then I'll open it up to any questions that the committee may have. On the long-term perspective financial statements, we talked about your business type activities. Your business type activities are all of your enterprise funds added up together. The proprietary fund statement in that position shows the individual enterprise fund. So you have your water, sewer, electric fund, which again, that's as of 12/31/22, and the non-major fund is the swim fund. Real quickly, a key measure is the unrestricted net position of these enterprise funds. In all cases, there is a increase in, at least for water, sewer, and the swim fund, there is an increase in that key account balance. Takes us over to the income statement. Pardon me, statement of revenues and expenditures and changes in that position. We don't call it an income statement in the governmental world. I'm not going to spend, I'm not going to spend a lot of time on this. I actually find that the cash flow statement is a better indicator of results of operation. And I don't want to get too involved here, but what a lot of readers, and when I say a lot of readers, I mean financial institutions and credit rating agencies, they look at the net cash provided by operations, $1.3 million. And does that cover your P&I on your debt? Well, you can see that your principal of your debt was 620,000 and your interest on your debt was 167,000, and combined that's 900,000 approximately. So you can clearly see that for the water fund, the net cash provided by operations is more than covering the principal and interest on the debt. Sewer fund is a little bit leaner, but it still covers the net cash provided by operations, still covers principal of 939,000 and almost 97,000 in interest. That really is a good benchmark to look at for your enterprise funds. Doesn't occur in Massachusetts, but there are some enterprise funds that have, because Concord and all the governments in the Commonwealth, they issue what are known as general obligation bonds. But other governments, have periodically issued revenue bonds where it's the revenue of the fund that is pledged towards the repayment. And typically when that exists, there is a rate covenant that's built into the bond that says that the net cash provided by operations will be about 1.1% of principal and interest. That doesn't exist in Concord, and it rarely exists in the Commonwealth of Mass. But that is why I think the cash flow statement and looking at net cash provided by operations compared with P&I payments, principal and interest payments, is probably the best indicator. Why I don't think the statement of revenues and expenditures and changes in net position are a great indicator is there can often be swings in the salary and benefit costs. Those swings come from major changes to pension liabilities turning to assets or assumption changes that can really cause significant fluctuations in these expenses from one year to the next. Not the cash that's going out the door, not the expense that's raised in the rates, but the gap expense, pension expense. If your investments really lost value one year, you're likely to see pension expense go up, but that's not a cash disbursement. That's why I think the cash flow statement is probably the best indicator of results of operations. Last page I want to turn to, I'm just going to scroll down, is the page for your fiduciary funds. You have three types. You have an employee benefit fund, which is your pension fund, and your OPEB trust fund. Standards require that although those are separate entities, they get combined to form one one employee benefit fund. You have your private purpose trust funds, and you have your custodial funds. If you scroll down, you can see the net position of your employee benefit funds is 234 million of the total net position is restricted for pension. That's your contributory retirement system's net position as of 12/31/21. And this $27.7 million represents the net position of your OPEB fund as of 6/30/2022. That is, again, I kind of bounced around more than I had planned to there, but I'm going to stop sharing my screen. I can always go back to it. That's a quick overview. Actually, some clients like me to give a 10-minute version. I'm familiar enough with some of these committee members that I think you really want a much longer version to understand this annual comprehensive financial report. A lot goes into it. There's a lot in here. So we tried to walk through this in a fairly in-depth walkthrough. There's certainly more we could talk about, but I'll pause here and I'll turn it back to the chair, and Sarah and I will try to answer any questions that the committee may have.
All right, any questions from our committee members or from town staff?
I have a quick question on the light plant. How is the broadband currently impacting the light plant finances? I mean, it's been a drag in the past. Has there been a turnaround in that in the last fiscal year?
Matt, could you, would you mind addressing that? I know, Zach Ventros, he could answer that off the top of his head, and by the way, I think we're heading to see Matt next week, getting that audit, up and running. We're actually getting it up and running this week and going to be on site for next, but Matt, if I could perhaps ask you to address that.
Yeah, so the I believe the telecom division folds into the financials the same way that the electric division department does, with the calendar year end data being rolled into the fiscal year and with the fiscal year financial statements. Up a few years ago, the results from the telecom division have turned positive. They're actually making money and they have positive cash. So I would say no, they're no longer being a drag on the financial statements.
And in fact, they are paying money back to the light plant that was accounted as borrowed from their initiation.
Correct.
Thank you.
Welcome.
So I had a couple of questions. One, it really relates to a strategy that we have coming this year, which is related to the overlay fund. So we have the overlay fund, a balance that's used to pay for changes, abatements and so forth from the assessor's office. And that balance, I believe, has grown to the point that we now are planning to take funds from it in order to help shore up the stabilization fund for the middle school. But I was just curious, what your assessment is of that overlay fund, and also that we have a potential strategy coming where we're considering adopting this what's called clause 41C.5 of for giving seniors with limited means, an exemption from their taxes. And how that works apparently is that the overlay fund is used to pay out the difference, until that can be trued up to the extent that, the rates don't relate to that. So the thing is, my concern, and the thing I'm just curious about is, at the same time that we are, going after that balance because historically we haven't used it, we are now potentially going to adopt a new policy that could more heavily utilize the overlay fund. And so I just wanted to check in on kind of, first of all, do you have any experience with any of this? Unfortunately, it sounds like Ashland's the only town that's ever adopted clause 41C.5. So I doubt if you've got much empirical data, but I still am interested in the overlay fund as it stands versus others and the strategy.
Well, we audited Ashland as well, but that's not a huge sample of but what I can add to that, because I don't have your overlay numbers at my fingertips.
I did see a line item on that just for the true ups of the year over year, but that was it. Yeah.
Well, I'm sure that I'm confident that the town has done this. When you look at overlay as to whether or not there is perhaps some excess there and it can be released, is the term that's generally used in the Commonwealth. Just be certain, and I'm sure that you are looking at any cases that might be outstanding with the appellate tax board in the Commonwealth. Pending abatements, maybe they were denied by your own assessing department for particular reasons, but then the taxpayer can appeal that to the ATB or the appellate tax board. Sometimes, Sarah, maybe you can talk quickly about it. We often will take a look at that in the audit process as a way to essentially look to see if there are any substantial unrecorded liabilities. Since I don't recall there being a significant adjustment, Sarah, maybe you can just confirm for me that as a result of our work, we didn't see anything major pending with the ATB level.
No, I don't think there was anything major. I feel like there was a small There's a handful, maybe, not
Mhm.
even, probably less than that.
Yeah.
It looks like the potential liability we had was just shy of $100,000.
Yeah, so,
$2 million in overlay as of the end of June.
right, so that it does look like we have an excessive balance relative to the level of activity.
Yeah.
And we just had a reassessment year, and apparently the abatement activity was no worse than usual somehow.
And the
Uh,
abatements are typically one-offs, not a class. Is that correct?
Well, I don't know that I can really answer that. I've certainly seen situations where you know, the whole class of, say, commercial property thought they were overvalued, and collectively the class of properties, in this, the example I'm thinking of, the commercial properties, abatement skyrocketed in one community. Residential had no impact, if you will, after a reassessment, but commercial, many of the commercial properties, they all filed for abatement. So sometimes
We
it
have the
can go by
opposite.
class. Yeah, I know you, yeah, predominantly residential community, yes.
Okay, well, and also they are the residential valuations did skyrocket last year.
Yes.
Which is actually why we expected to see a lot of abatement requests, but I don't know. Okay, so that brings me to my more maybe off the wall question, which is really about the statement of net position, which is what I see here. I think print page 18 and the Acrobat page 28. And what struck me here was just our, current asset position. And I know that this is probably, or capital assets, that this is probably pretty immaterial. It's just a rough guess, given the municipal purposes of our capital assets. It's not like we're buying and selling these assets all the time. The valuation is, just a bookmark here. But I was still struck that, okay, if you look at the total valuation of property in Concord, it's like $8 billion now. And the town's property as a percentage of the overall, the municipality's share of that property is significant. And I realize that property, a lot of it is, conservation land, and there's all kinds of restrictions on everything. But even so, to look at capital assets as valued at 260 million, that sounds low. That sounds extremely low, actually. So I was just curious how you come up with that. And just if I do a top down, I take 8 billion, maybe I'd say, okay, we got a quarter of that is town, and then you take 10% of that. Just even 10% of that, that's 200 million, right there. So I'm just trying to figure this out.
Here I can comment on this. Hopefully it will shed some perspective on it. And that is that your capital assets are reported at historical cost. And so you acquired a piece of land 200 and something years ago. What did you pay for it back then?
Okay, so this is not current value.
This is not
That
fair
answers my question
value.
right there. Okay, and same thing with now, but we are depreciating equipment and things like that, right?
Yes.
Are we depreciating buildings?
Yes.
And yet we're still carrying them at the cost of construction?
No, the numbers you see on the page that you referenced was print page 18 or PDF page 28. Those capital assets of 263 million. Yeah, that would be at net book value, net of depreciation.
Yeah. So we have a lot of buildings that are valued at zero at that point. Yeah.
Or
by the way,
or a dollar.
Given that, we will have to tear them down. We're not going to be able to sell them to anybody, and.
Yep.
But I guess one of the reasons it's on my mind is that I do think while this audit looks incredibly strong, right, in some respects, on the other, I think we're aware that things are tightening up, basically because of cost pressures, tax pressures, inflation. And that indeed we've actually been using up those encumbrances, not just because, it's good to use up encumbrances, but because we need the money. And so things are going to get tight. I think we may be in a position where declaring surplus assets and selling some of those assets, may be a strategy. I mean, we have buildings, that probably aren't, I see like electrical substations and things like this where the technology's moved on. You don't need all that switching equipment the same way you used to, all that stuff that, we may end up, and the schools have some potentially surplus properties coming up that we will need to consider those assets, not just as, a row on the spreadsheet, but actually is something we might consider as a financial opportunity. So I just wanted to try to drill in on that to say maybe we need to scrutinize the capital assets line a bit more and unpack it as we go forward. So
I wonder, Scott, if your firm would agree to the point where that would show up in a memo someday, just to emphasize that point, that more attention could go there.
Certainly, it is with very much a purpose that we looked at the reduction in your unassigned fund balance of $250,000. And we talked about the relationship between essentially the favorable budgetary results of $1 million. That generates free cash. And you used 1.6. That's a relationship that should continue to be monitored and then may generate what you folks were just talking about is there a need to generate other sources of income in the future, given inflationary pressures and the like. I go back to that first one about the general fund and keep an eye on favorable budgetary results. I'm assuming they're favorable. They can sometimes be unfavorable, less the amount of free cash that is used for the subsequent year budget. Keep an eye on that.
okay. Yeah, well, we were talking last night about selling splinters of the Old North Bridge, which the town does own. We confirmed with the state, the National Historic Park superintendent last night. So to the extent they repair and take off boards, we could cut them up and sell them.
Well, maybe we need to check the fixed asset record, Sarah, to make sure that's on there.
Well, yeah. Do you have the Old North Bridge there as a capital asset? I'm curious about that.
I don't know.
And the value is going to go up considerably in the next 2 years.
That's right. I think we should auction it off personally.
But, coming back to your point, Matt, I see this not only as potential revenue, but really a needs and utility analysis on some of our assets. If we don't need them, we don't need them.
That's right. That's right. And again, I don't know that that's strictly an audit issue, but it is a financial planning issue that we should be looking at. Yeah. Great. Well, I think that we don't have any motion on this. We're just reviewing the draft report at this point. So thank you for that.
We need to dot a few I's and cross a few T's on this. I need to commend Sarah for pulling this together late last week and over the weekend. We got some information in late last week that needed to get added in here. And if I may, with the committee, we will be drafting a management letter. One of the things we quickly talked about, I didn't say very much about it today, was there's the standard setters changed the guidance out there for leases. And you now have some lease receivables and offsetting deferred inflows. I can tell you about that if you really want. And there's 2 more standards that are coming due and effective for the fiscal year that we're about 75% of the way through right now. And just with, the computer conversion that's going on some of these new accounting standards are way more complex than ones from a few years ago. Many governments have begun to outsource some of the accounting associated with leases. It's a very comprehensive standard. Remember, our firm spoke about it last year at the March school that the accountants and auditors go out to. It's not a standard that can just be implemented in a couple of days. There's a lot of research that the town went into doing it and a lot of upkeep. And one of the new standards that's effective for the year we're 75% of the way through is very similar to leases, but it's for subscription-based information technology. And it would just be, it's obviously not my decision, but I think the town could probably benefit from outsourcing this. We've talked to a few companies, and I'm going to say about a third of our clients have begun to outsource this. Companies have developed some great technology to you scan in the leases, and it gets all the relevant information and sets up either your lease receivable or lease liability. It can be a substantial time savings for a finance department. So I would urge you to look at outsourcing leases and SPIDA. SPIDA is a SBITA, a subscription-based information technology arrangements. And the other one is a PPP, or a public-private partnership. These are very complex accounting standards that you really may be able to quicken the closing time by outsourcing some of the accounting associated with these new standards.
Okay, and we are a little behind in reviewing our public-private partnerships of late, so that's also timely to bring up.
Thank you.
Okay.
Scott or Sarah, can you give us a page reference on the lease information in the document?
Yes, if you go to page 29 or PDF 39 and look in the general fund column, couple inches down from the top, or maybe half an inch above the total assets, you see lease receivables of $401,000.
Got it. Thank you.
Now, one of the things that needs to be perfected in this document, there needs to be a footnote associated with that receivable. Speaking very frankly, Sarah just didn't have enough time to get it into this document before today's meeting. So she will be adding that.
Got it. Okay. Matt, I just want to note that everything I had highlighted in my homework to prepare for the meeting, Scott and team anticipated today, so thank you.
Okay. Nice job.
Thank you.
As usual. Thank you, Scott.
Thank you.
Okay, then I think that takes us to our final agenda item, which relates to the Financial Audit Advisory Committee charge.
Let me just interrupt for one moment.
Yeah.
Forgive me. Ian, can I put you on the spot? You're representing the admin side on the schools. Any questions or comments?
As far as our audit goes so far?
Yeah.
It's in process for the region. All the work for the town that we needed to do is done, but the region, I know they're in it. They just gave us a list of some new transactions they're testing. So I'm not sure what the timeline is right now, but we're in the middle of it. So.
Got it. Thank you.
And Bob was going to be here, but we actually we have a heating issue at Willard that came up this morning.
Yeah, I heard another leak.
I know. Yeah, unfortunately.
Yeah. All right. Thank you, Matt.
Oh, that could be an impaired capital asset. We'll have to take a look at that.
Thanks.
All right.
Mr. Chairman, if I may, is this something you want us to stick around for?
Oh, no, you can head off.
Okay.
Yes, that's fine. Thank you very much.
Thank you very much.
Okay.
Yeah, thank you.
Thanks, Scott. Thanks, Sarah.
Thank you.
Okay, Mary, do you want to kick this one off?
Yes, so as you may have seen through here we wanted to discuss the membership of the committee. It seems over this past year, we've been down one citizen representative. I know that Carol, thank you for your service. Your terms have expired now. And so you know, we need to figure out how we want to move forward with this. I know the light plant, Wendy Rivali's terms have expired. So someone from the light board needs to send a new representative to the committee. And I think, Arthur, you have one more year, I think, left on your terms.
Yeah, I was just recently sworn in for an appointment, so I don't know if it's a year or two, but whatever.
Yeah, the clerk's office has been reaching out to various committees about the memberships and making sure that we're up to date and in line with the charter. And
You may have had a corrective appointment, basically.
yes, I think so. I think, Arthur, you did. We were trying to, they're trying to clean up some of that, some of those issues. So we wanted to take the opportunity today to talk about that and what direction the committee wants to go into and what options do we have and what the process is, I guess, in terms of who the next group of people who want to join in. I know there's a lot of committees out there that they're still seeking volunteers, and it's something that it's, you know, there's nothing really out there right now for this particular committee, any volunteers out there. So we definitely need to talk about, you know, do we amend the charter to do something differently, or and propose that back to the select board, or, you know, what would be our next steps, I guess, in the process.
Yeah. So Mary, one of the things that I found most striking, and if you think about the discussion we just had, is that there is no one from the finance committee that's a member of this advisory committee. So, you know, I don't know why that is. Is it a balance of power question, or, you know, something, why it didn't originally include members of the finance committee? But when you,
Well, but Matt, I think actually a lot of us are former finance committee members. So I think
Yeah.
that might be part of it, is that it would be difficult to be on both committees at the same time.
no, well, okay, to be on both. I was thinking about, that's interesting, because sometimes, you know, they have liaison assignments, and some of the kind of assignments do go a little bit further. When you look at this committee, what, we meet 4 times a year or something? The burden is not that high. And I do think that the material is potentially, you know, very enlightening for those that are working on our budgets and planning. That now it is a little, I have to say, when I went through this audit, I kept kind of having to pinch myself, because I realized that we just finished working on FY24. And so I'm looking at these numbers and I'm going like, those numbers don't seem right. And then I'm like, oh yeah, that was the past, this is the present, and then there's the future. But even so, it just gives you a big picture view. And I don't know that it necessarily increases the workload so much. It's really it's about being informed. And I just thought a member now, and it is true, I think you're right that, okay, it's only natural that former finance committee members would end up here. But I also just think, wow, me as a member of the select board, I'm not really that, you know, capable of reviewing an audit compared to someone who with a real finance background. So, and you know, I'm the select board member. Select board has to be on, you know, and so here I am to say that it's too much work. I'm a select board member, and I'm a member of this committee. Is like, well, if I can do it, a finance committee member could do it.
I think, you know, your point, a liaison is probably not a bad idea, although typically my understanding is that the liaison position for people in the finance committee has really been to see what's going on that relates to putting together our budgets, not reviewing what has already occurred. I think
Right,
right. So we're kind of looking back rather than looking forward. So,
but they were on the spot when the budget was formed, and now they see, here's what happened. You know, we set that up, and here's what happened. I mean, of course, the town is forming the budget, but still.
Well, I think you make a good point. I think we should remind ourselves that the FinCom is the largest committee in town.
Yeah.
So I don't think we'd be putting an undue burden on them. But backing up a little bit is the problem we're trying to solve, the membership vis-a-vis the 3 citizens noted in our charter?
I
Because-
guess in
I would
part,
say
I mean, I
yes.
was looking more generally at just achieving quorum.
Yeah, which hasn't been a problem, but it hasn't been a slam dunk either.
Right.
Yeah.
I mean,
Have
we are
you-
a pretty small committee, so I mean, so to Mary's point, should there be a few more people on here just to sort of,
There should be,
Have
I
a few
mean,
more
we
voices.
should maybe just do a little bit of marketing here. There are people in town that could staff this committee, for sure. It's maybe just too obscure.
I can think of people in my neighborhood who live and work in the world of finance who would be much more savvy than I am at it.
Well, and that this one isn't a high burden committee. If you hadn't yet been in a town committee, this might not be a bad place to start.
Yeah, because it's hindsight analysis conducted by others on our behalf.
And, 4-6 times a year. at the most.
Yeah.
and well, and also, and conversely, looking at folks that have served on other committees and would like to stay involved, but this is something that's really, it's a matter of reviewing financial reports and hearing what our auditors have to say and making sure that somebody has taken a look at this beyond the town staff and the auditors. So it's sort of a nice position to be in. It's sort of at the end of kind of a lot of years of commitment too, as well as somebody who's kind of just wanting to get a feel for it. I almost think that I'd rather see us on the other end of it coming into this.
Because then you're really familiar with the town operations,
Well, yeah, and you don't want to discourage somebody who's just deciding to stick their toe in the water that
they see,
that there's not much to do here except review financial reports of things that have already occurred. So
yeah.
I do agree. I mean, there's got to be plenty of people out there. It's just a matter of us reaching out and seeing.
Yeah, I have 2 comments. One, I think it's a natural for people going off the finance committee to be encouraged possibly to serve in this. That would be a good transition. It would accomplish a little bit of what Matt's talking about, having people who are working in budgets now look and see what's happened. And, I don't know to what extent we sought those people in the past, but I think they would be great. And the other thing is you have to keep in mind that through COVID, we've really reduced our number of meetings and involvement in a review. I mean, we used to meet pretty regularly,
That's true.
4 times a year. And, I don't want to be critical because I know there's been a lot of stress going on, but a day or a day and a half to review 140 pages, it was not enough. And, hopefully in the future, we'll have more time to, even if we have to put the meeting off a week. I mean, it's just that there is a lot of important data in there. And if we're supposed to be looking over the shoulders of the auditors, we really need to have some time to look at the stuff and address it. And I have to admit, I was not able to spend more than an hour in this, which is hardly adequate given the assignment. So,
well, and fortunately, this isn't the last time we get to look at it. We will, right, this is the draft.
well, that's true.
Yeah, but that said, I do agree with you that it would be better. We could add a more productive discussion if I had gotten a chance to look too a bit more. But so again, Mary, the main thing you were looking at here was the membership, whether we wanted to propose changes to the charter. And so, I mean, I think what you're hearing here is that we don't want to reduce the number of citizen members. We want to try to go seek out more citizen members. I did have another comment though, which was about the membership from the select board. And I don't know, maybe Court, you have maybe the same opinion about the schools, but at least on the select board, this has not been our practice to have a member serve for 3 years. The practice has been that the chair is the member of the financial audit advisory committee.
And in our case, we assign representatives and liaison once a year when we seat the new officers.
Right, so these are one-year appointments that happen from the select board and the school committee.
But there is something to be gained by the continuity, unless you've got a lot of financial bench strength on that committee.
Well, and I think that though we would leave that to the discretion of either the school committee or
Yeah,
the.
yeah. You know, hearing
I'm
the
just saying
conversation.
it's not a 3-year term, is what it really comes down to. And you can't always count on a 3-year term anyway, because there's elected positions, so.
I think when we first started the committee, I think it was Mike Lawson seemed to have been there for a number of years, and I think maybe that's where it may have started, but I think things have changed since then, since he was
Yeah.
around.
Well, and it may change again, just given that, you know, the skills and orientation of members of the committee. And
What would you think of this for today's purposes, to keep the charter as it is, recommend no changes, but one, reach out to the FinCom.
Yeah.
And two, if any of us have townspeople that we know who have particular acumen, push them to get a green card in.
Yeah,
Yeah.
I was gonna, the moderator is the one that appoints the finance committee, correct?
that's right.
Yes.
So maybe reaching out to Carmen and get I mean, it's easy enough to get a list of people. that
Oh,
are
well, I
coming
think it's
off
right on
or
the website.
recently come off the finance committee. But I would think that if we've got some folks that are just finished up finance committee, that would be a good place to start.
And I think there's only one rolling off this year,
Oh, that's right, only
which
one.
is unusually low. Yeah.
Yeah,
Yeah,
Okay, but we have some that rolled off last year, so.
correct.
Yeah.
Okay,
Excuse me, there was another point that was brought to my attention about CCRSD. According to the charter, there should have been a representative from CCRSD, or is the court representing both?
I'm both,
Okay.
to the delight of my colleagues, yes.
yeah, I could definitely see that.
you're a good sport, Court.
Yeah.
So, yeah, I think then that kind of leaves us, I mean, you know, unless we wanted to wordsmith those select board and school committee things, but they haven't gotten in our way up until now. So I'd suggest that maybe we just leave the charge, but that we, you know, redouble our efforts to try to get members. And I also, again, would encourage, I think we should encourage members to assign the finance committee to assign a liaison, even so, of a current. I see, by the way, when I look at the online, the finance committee members, I see several rolling off.
Oh, really? Okay. Then
Yeah, look at this.
I'm just recalling a statement.
Kathy
Maybe,
Kukla. Oh, well, you know, some may re-up.
yeah, that could
Yeah, they
be
may
it,
have a
yeah.
second.
Yeah, they're probably re-upping. Okay, because there's quite a lot. I don't know who among these are actually rolling off, but
The
Okay.
only one rolling off this year is Brian. Brian Taylor is rolling off.
okay. Well, I could try to approach Brian. Okay,
And Matt, if you could maybe reach out to the light board about who would be the next representative for the committee?
Yeah, we have a meeting tomorrow, so I will mention something to Dave to bring that up. And get that topic
yeah,
going.
I should be able to sort that out.
I'm trying to think, Mary, has Wendy been on all along as the representative?
Yes,
So
Yeah.
she's been our
Like,
only representative, right? So she goes back to the beginning with me.
yes, exactly.
Yeah, yeah. It's time. We need some new blood.
Okay,
I'm feeling like it's at least 7 years. Was it 2015? right? It was 2015 because it came
Yeah,
out of,
'cause
the-
Tony was still here.
Yeah.
He left in 2016, I believe, so he started with the committee. so-
right, it came out of the governance committee. That was one of the recommendations from the town.
But I don't think Wendy's been on the entire time. I think she's only been on during her tenure on the light board.
Well, I think before, because she was on FinCom too, so she may have, but I've always been the FinCom representative, so I'm not too sure.
Yeah, I'm
I
trying to.
feel
think
like,
who was-
Wendy's been on as long as I've been on, which is the beginning. But I may be wrong, Art.
I can't remember.
But we're looking at some near-term changes. And we've got the 22 audit coming back at us with a management letter with some change in membership inheriting that. Am I correct, Matt?
Yeah,
And to that end, how do we look ahead to anticipate when that's going to occur, understanding that we might have likely new people at the table?
I don't know. Mary, do you have a sense of when we will see that audit again?
Oh, you mean as far as the final report?
Yeah,
Yeah, I mean, we're shooting for the beginning of, well, at the end of this month is what we're shooting for to have it finalized.
well, so I just
Have
wonder if
it
we
in
should
May.
have a quick meeting so that we can approve that audit. I think Court's on the right track here. While we still have the membership we have. One thing to note is, of course, that members continue to serve even if their term expires until there's someone appointed in their place. So even if this rolled into early May, that would be okay. I think the current membership here, if we could get a quorum, could approve the audit. And I think that would give people a clean slate to start the next round of members on there, because I'm going to be rolling off, of
Yeah.
course.
So we can try to schedule something in beginning of May.
Yeah, earlier the better, because that I do know that the select board does tend to, well, they'll be meeting May 15th, it looks like. And at that meeting, we'll be assigning, a new member, most likely.
Yeah, I mean, we can try to schedule something right now with everyone to look at their
Sure.
calendar. We can come, I can give some proposed dates. I mean, we typically do Tuesday morning meetings.
Uh-huh.
So I can take a look at the calendar and I'll shoot something out to the members. And then we.
Okay. I mean, that would just sort of logically be May 9th.
Yeah,
Just saying. I'm gonna pencil that in.
okay.
Okay.
And you would like to have Melanson come back and go over the final?
Well, essentially, if they made any further changes, give an opportunity for, if anybody has additional thoughts.
Yeah.
And then we would move to approve it, right?
Yeah.
And I think complete our responsibility for that audit.
Yeah.
And I believe that's the only real pending business we have right now, isn't it?
Yes, yeah.
Yeah, the other two have been approved, so.
Right. So I just think that would tie it up with a bow and off we go.
Could we
And
do
so it'd
this
probably
in
be a
the-
half-hour meeting, We
Ian?
could also review the minutes. And
My apologies. I was saying about the CCRSD audit. Can we bring that into the May meeting? Ian?
Let me talk to the auditors. The CCRSD audits usually comes together quick. It's not as big as the town. There's not as many, statistical tables, census data, that kind of thing in it. So when we sit down and do it, it can come together quick. So let me just touch base. I just gotta make sure they have some capacity.
But on the other hand, are you up against any kind of deadline for it?
So prior to COVID, there was hard deadlines for these. But they've been getting tighter since COVID, but they've been all over the place. So there are hard deadlines, but they've been getting pushed around.
Because I was just wondering if maybe a subsequent meeting would make sense to do that again, so that we're not. I mean, I'm also just in the short strokes here. I'm just thinking like, okay, let's just close out the stuff we got. And then, give the next round something to chew on.
So we can do a short meeting and I'll look at May 9th and just have the auditors just come back briefly, just to go over the final.
Just go over if they have any changes
any
and, yeah.
changes, and
Just to
then-
make life easier for Mary, do any people who are currently on the screen have a problem with May 9th?
No, in fact, I penciled it in too, so.
Same here,
Yeah.
so,
Good.
Okay,
I think it is.
all right.
I'll check with,
Unless the auditor has something.
yeah, of course.
And just so I understand, did Wendy have a conflict this morning, or is she feeling that, you know, that she's stepping away?
yeah, she was stepping, she was out of the, I think she said she was out of the country.
She's out of it.
But she's also stepping away, and so I think she was going back to also tell the light board about her replacement, but I think, you know, in her mind, her term is done.
Okay, so yeah.
All right, productive meeting.
All right, and I've got a couple of folks that I'm thinking of in my mind too, that it's probably worth maybe making a phone call to see if any of them might be interested in stepping up too. So if we have anybody that's interested, obviously they need to fill out a green card. Mary, would you want to know those people in advance?
I think at the end of the day, it's the committee. I'm not really sure how that works and who
right.
decides.
Yeah, normally like the chair would then submit that to the select board for their
Yeah.
approval.
Okay, all right, so it's just a matter of getting them to fill out a green card.
Yeah.
And let the process-
And Lori Austin in the clerk's office is really good about distributing those. Okay, so do we have any citizen comment before we close? Then I will adjourn and almost right on time. So thanks, everyone, and see you May 9th.
You
You may
Thank you
not-
very much.
Great, thank you very much.
Hi all.
Bye-bye.
Bye-bye.